Hello dear traders, petar.jacimovic here from vikefanalysis.com. I want to post my update for USD Canadian dollar, since I found a potential good opportunity in this currency pair and I established it position. I actually split the position from my original sizing, and I split it to put actually fixed targets. So I have two potential targets to scale out my position, and I will explain the reasons of this setup. Also, I will alert you about my new project I'm working, which will be ready for next month, and it's about the I can call like intraday, but it's maybe more precise that it will be the news trading room. Basically, we will focus on the potential impact events. So I will go live when I see that some high impact events, see the price action and so on, and then define if there is anything interesting to trade. So basically, I will watch the shadow of the high impact events and so on, and then try to position myself after the event. Or very rarely I can define also to put some pending orders before the news, but it will be the news, basically trading room where we observe the high liquidity potential to try to find the best potential setups on the market. Okay, and the subscription will be also very cheap. I mean, it will be like $20 a month, and you can join the Skype. I have also the Skype trading room, the free Skype trading room, which is public and open in during the whole day, so every day, every trading day. So you can join for free there. I will put the link of my Skype room in description. But for the next month, from the next month, I will actually start to that trading room, which I will focus on the high impact events and so on, and then try to find some, if I see any good opportunities there, right? The key thing on the market is basically to find a high liquidity, to see the institutional flow of the money, and then try to ride with that institutional flow of the money, right? There is two types of the movements which happens when you see the big price action. The price action by nature can be hedging purpose, so it can be used in the hedging purpose, or it can be used on the like speculative purpose, right? We are interested in this speculative purpose, so that some institutional money and so on, they did this for example price movement because of they speculating higher price on specific symbol, right? If they hedge, there is a potential risk of that, so we want to find the nature of the price movement. That's what actually the main job of the trader. I mean, for the traders who trade the large liquidity and so on, which are basically the smart money and institutional traders. So for example, the most recent USD Canadian dollar I have position here is this setup. Basically is based of this strong liquidity which happened. This is a tick volume, but it's also on the futures market, the big demand and the big spike up in the price spiked about 100 pips in a approx 20 minutes, right? This is a very big moment on this currency pair, and the reason of this moment is basically the bad core retail sales for Canada. The expected was 0%. Actually, pardon, the expected was 0.4%, and it came out 0%. This was the good indication for the investors and speculators to start to buy this once they saw this news in their dashboards and so on. So they triggered aggressively this and push this higher. Right now, I teach my students on my mentorship program and so on, so to find the purpose of this moment, this can be a tricky, because the smart money can mark up something for the better price so they can resell, but the smart money can also mark something up for the further advancing as well, right? We need to know the purpose of this, right? We need to know the purpose of this movement. reasons behind speculative or the hedging, or they hedge this currency pair for their reasons, right? So in my opinion, this is a clear speculative movement, and this strong momentum and liquidity is a speculative, right? And this got the potential for very good, 50 to 150 pips upward price at least. That's why I jumped in, and this is kind of situation which I actually like to trade, right? Why this is in my opinion, they use this event. If you go to daily time frame, they use this to go out of the resistance after prox of 24 days, almost a whole month. The price didn't have power enough, confidence, and didn't have enough speculators positions to push this higher, right? To push this clearly higher. Okay. As you see here, this was also a news event where the actually institutions started to protect this, and from that moment they started to push higher this. This is a big momentum on this currency pair, so I want to use this momentum for the higher price and try to profit from this. Okay, so the purpose of this demand which happened on this bad CPI retail sales, pardon, core retail sales actually went 0%, exactly was 0.4%. This was the boost for speculators to add more positions after this. That confirmed technically that they went out of the strong resistance here, and this was the key push in my opinion. So this is not hedging purpose, this is a more speculative purpose in my opinion, of the nature of this big liquidity and big spike. What I actually wanted to do when this happens is to try to find some good areas to establish position and try to define the proper stop loss area, and which can also bring me the good reward, right? So I went to 5 minutes and nothing special here. Read some volume analysis there. Also in the futures market, use like 32 is the Fibonacci ratio, which actually applies supported there, and I actually established at this point, since I want to see how the price will, to collect more information about the price action. So I actually bought at this point here at 48 and 50 area. Some of the traders got a better entry for 10-15 pips, I mean some, but it doesn't matter. This, what's important is that I'm going for 1-2 ratio in my first position and almost 1-5 ratio, let's say 1-4 ratio on my second position. That's what I'm aiming on this one, right? So I read the sentiment of this movement, I see what's they trying to do. If I'm wrong, I put the stop loss below this. I have the bike of call this, I will zoom you in, the reaction swing. Okay, so the reaction here, and I put this reaction swing. If the price got really power to go there and test this, it will probably go below all the way to this area here, and I want to exit as and cut my loss, right? So also I'm using the market profile to see what's going on also in terms of the price and the time. As you see, the point of control from this is the Canadian dollar for this big day. The point of control from US session is set at the price of 1.3 330 area, let's say, right, or 29. And then day after, the Europe session confirmed that point of control, right, the same price. Look, this is the Europe session for today. Okay, and then in this A period, in the US pit session, when the stock market opens, right, we saw the aggressive buyers in A period. Then the B period also continued with this buying sun, and there is a big buying pressure there. So this is kind of opportunities I really enjoy, and I basically want to base trade always like this. If there is no big liquidity and something big happening, and you have no big actually reason to be in the position, then that's what's leading you to some bad trading and not high probability trading, and also you will not be able to catch any good risk reward ratio. With this kind of liquidity in the background, the smart money can easily add positions more and more together with public, which will join later on when they see that they're wrong, for example, because of many traders will try to sell and try to catch potential reverse here because they saw, for example, some resistance. You know, their general thing is sell near the resistance, but the market makers and the smart money say we buy the strength, right? They see the strength, they will buy the strength. If there is a big reason behind this, big liquidity and high volatility, they will continue to buy this and not let any retail sector or public to go below their level they reacted firstly, right? Okay, so again, most of retail traders will sell here, and they will be afraid to buy near the highs, right? Because they will think, you know, you're near the high, so this is not good to buy, you know, because this can go lower to do some correction, stuff like that. But the point is, there is a big pressure in the background, and the big pressure, and the sellers don't have power for any lower price. We saw this in the next sessions here. They confirm the point of control, the higher point of control, according to the previous point of controls, and they are absolutely in control. So buyers are in control and buying here with a decent stop loss. You know, stop loss is like 35 to 40 pips to achieve potential expansions and or 100% of this movement, or 161.8 percentage from this movement, which is absolutely possible because of this massive liquidity and the reason behind this liquidity, right? So you just control your risk, you never extend risk, you know where you're wrong, which is this area here, right? And you just expect high price. So we speculate for a high price because we think this liquidity is also caused by the large speculators on the market and not the hedgers, right? Just one simple we'll explain you in the one simple, also one of good setups which happened previously on this, right? You can go also and place white if you want. I will add a volume here. It's a tick volume, it's also on the futures, it's similar. I mean, again, this big weakness on this bar, this was a 1 hour, happened basically where it happened after that ECB press conference and so on, and some speeches and so on, and some hedgers basically bought this, some near intraday hedging strategies popped up, and they bought this because of whatever the reason. Draghi said something, whatever they used to hedge this high impact event. So this is a not, for example, this buying was a not speculative buying which should affect the price to continue higher. Instead of that, this was the good area for the sellers to establish selling position for a lower price and benefit, because they know the purpose of this as a hedging purpose, which means that speculators are still bearish, so they didn't change their mind, right? And with the good proper risk control, you can trigger this one, right? And benefit from this move. Anywhere, if you enter it near this area here, you're actually collected very good profit, right? And the price is still going lower because there is nothing big right now here to affect, right? So it's all about you. If for example you risk 40-50 pips, you easily catch almost 1-3 ratio. You can exit totally and wait the next event, for example, or you can lower your stop loss and break even. Probably it will be triggered here if you watch the price section. But anyway, everything leads you to about 1-2, 1-3 ratio, which is very good, and you use this good liquidity. So understanding and analyzing the price action and the nature behind this big price action, this is the key for successful trading on any financial market, basically. Okay, so this is what's most important thing on the financial market. You don't want to trade every day and think that every day there is a good setup. You know, you will just be trapped like the public, you know, trading, trying to trade every day, you know, and every hour, think that there is always good possibilities, but it's not like that. The real big potential risk reward setups happens usually like 90% of the time after some high impact events, newses, speeches, you know, and so on, right? Interest rate decision, retail sales, and you know, generally high impact events you can find on any calendar. Then you just need to do your work and see the purpose of that. Of course, you not be, I mean, this is a not holy grail, and I teach you how to use your own logic to understand the price behavior, watching the different perspectives, which I mean the different time frames, and then see what's going on with liquidity. Also do some intermarket relation, what the futures or maybe option market, and then find potential high I mean with set up with a good risk reward ratio, and that's it. You do this, you follow every high impact event, you see what's going on. If there is a big movement or something big I want to be in, so this is a basic concept, right? Simply, if there is a news of a 20 pips which move the market only 20 pips, there is no room for any, for example, trading, any big trading, right? So, but if the price actually manages to go, like for example in this like 70 pips, and then aggressive sellers came in and speculators again established sell position using this markup and hedging strategies by some potentially high frequency traders, right? They use this to establish very good setups. Similar, we may expect on USD Canadian dollar, which is happening right now, for example, in the next period. So this can be in the next few days and so on, but this liquidity is still in the background, it's very strong, so we may expect supporting for higher price. I'm aiming, so it's like this, you have a, I'm aiming for minimum, for example 1-1 ratio, but this is actually here I'm going for about 1-2 ratio. Okay, in this particular setup, 77 risking like 40, and then going for potential 150 pips risking like 40, right? Almost 1-4 ratio. So this is my plan, right? This will be also area to watch. It's a 61.8% of the fib of this move. This is for about 30 pips upward. This may provide us some resistance and so on temporarily according to the ratios there, but you know, we may expect high price and so on. Okay, this will be all for this video. I hope you liked. Again, I will put my description, my link of my trading room, so you can join there and so on. And I'm starting again to observe high impact events and some live, doing the live trading, live analyzing the market, and the subscription will be about $20 a month, so pretty cheap, and you will also see, you know, very qualitative and informative live sessions and so on. That's it. Wish you good trading and have a nice day.